Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, July the 23rd. The year's 2024. Let's talk trading. Watching with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And a friendly reminder, always have your risk management in place. Never lose more than you're willing to lose on any one single trade. So, Walmal, welcome back from vacation.
Oh, thank you, sir. Yes, it was a little bit of a family reunion as opposed to a vacation, but we need to do that with family from time to time. So got to see nieces and nephews and brothers-in-laws and sister-in-laws I hadn't seen in probably a year since I had a family reunion. But it was a good time. So and it was time to relax a little bit.
Yeah, so you said you haven't traded in a few days, so you want to get back into it.
Yeah, it's, I've mentioned before on this channel that, I had a pretty good friend, and unfortunately he's passed on, but he used to say that when he was a trader with one of the big banks, that when you went on vacation, what they like to do is have you go on vacation every 3 months is what they like to do. And they wanted you to go away for a minimum of a week. And then when you came back from your vacation, they did not allow you to take any trades for at least 2, 3, 4 days. They expect you to sit there and watch the market, do your research, get back into the swing of things before you ever took a trade. And the idea behind that was that way you're coming back in, and you're coming back in, just being ready, because, it's like anything else. You walk away from something, even if it's only for a couple of days or a week, you lose a little bit of your edge. And that allowed, the bank's idea behind that was it allowed you to get your edge back a little bit before you took any trades. And then what they did was they actually even cut back on the amount that you were allowed to trade, and let you scale up once you've been there for a while. And I've taken that to heart. Now Tiro will attest to this, that there was a period when I was trying to build up my account. I was trading while I was away on vacation, but those were unusual circumstances where my account size wasn't where I needed it to be. And so I went through a period of about a year and a half or so where I really didn't take any vacations. And yeah, I was away with my family, so to speak, but I was not really on vacation because I still traded in the morning and then spent family time in the afternoon. And, that was because of the situation I was in. It was not the best thing to do, but at the same time, it was what I had to do at that point in time in my career.
Yeah, talking about watching the market, I just watched it bounce off the weekly open.
Yeah. Yeah, it's kind of interesting that what's going on here right now. Looking at this market, I was like, I wish I was trading, because you could have made a lot of money on this market. You say, how you can do that? Only 47 pip, range for the day. But good grief, over the last hour and a half or so, a little bit more than the last hour and a half, it's been doing a nice little range where it goes up, went up to the 20, came off the 20, went all the way back down to the 15, and then it's hung out there, and then it dropped from the 15 all the way down to like the 7 or 8, then went back up to the 15, and then came off the 15, dropped all the way down to the 5 level, and then it went all the way back up to like 15, 17, something like that. Now then it went all the way back down to like 7 or 8, and now it's back up playing with the weekly open. This is doing the type of trading I do with flip flops, or any of those type of trades. It's beautiful because you can go and pick up 3, 4, 5 pips, over and over and over again. And so over the last hour and a half, you would have had the ability to pick up that many, that 3, 4, 5 pips, minimum 3, 4, 5 pips, 1, 2, 3, 4, 5, 6, 7, 8, 9 times. So if you would have been in it, and let's say you were able to maximize as an average, let's say of 3 pips, that's 27 pips in an hour and a half. That's some serious change at that point. You know, and I don't care about your account size, because the thing is, when I say serious change, I mean what you're doing is you're building up your account. You know, you're building up your account, and that's what matters. Is it's that thing. You got a $50 account. That's okay. If you with 27 pips, you can build up your account. Meaning, go and put in 3%, make 3% off your account. You know, you make I don't care if you got a $50 account, you make 3% on your account. You know, 2-3 times a week. Before you know it, you don't have a $50 account anymore. You got a pretty nice nest egg.
That's for true. In fact, one of the emails that I get from different traders or different trading sites, they were talking pretty much about that same thing about, it's not you go and you do one trade and you're done. It's something that you're going to be doing over, a length of time for years, and you're going to slowly build it up. You're not going to, hit that lotto right off the bat.
Right. And the thing is, that's exactly the right way to look at it, because the thing is, let's say you start off with, a $100 account, okay, which is feasible by most people, and you start off with a $100 account, and you grow a $100 account by 2% every day. Yeah, you're saying, well, I'm only making $2. I'm only making $2. You're right, you're only making $2, but tomorrow, you're making $2.02. And then the next day you're making, a tiny bit more, and a tiny bit more, and a tiny bit more. It compounds very, very quickly, and that's the thing. But in order to do that, in order to make this work, what I always say all the time, you got to preserve capital, which means you can't have that, I was talking with a trader a few days ago where, actually it's more than that. It's been probably a week or two now. But, it's one of those things where, yeah, you can go and, if you consistently make it, but then what happens is you just have a bad day. If you don't cut it off, if you don't cut that bad day and just say, hey, I'm going to go and say I'm going to lose 5% for that day, and you say, that's it. That's all I'm going to lose today is 5%. If you don't do that, next thing you lost 30%. Now you put yourself back. Easily. Not you think, well, if I'm making 2% a day, it's putting me back 2 weeks. 15 days or 3 weeks. It's a lot more than that because it's compounded up. It actually puts you back probably a month and a half, 2 months. So that's why it's so important that you go and make sure that you've got all your risk management, stuff in place, because it can seriously hurt you. So what does that mean? You go and take your risk, or you take your trades, and when you win, you win, and when you don't, cut it off, man. Cut your losses and move on. And if you do that, you'll be okay. But the problem is, most of us, we got that big G, big greed, and it's going to come back. People run the race, and they basically say, I know it's going to come back, and they run on greed. Or the other part of it is that I can't afford to lose this trade. I mean, I can't tell you how many times I've heard somebody, when I ask somebody to look at they've sent me their trades, and I said, why did you get out here? I couldn't afford to lose the trade. Yeah, you couldn't afford to lose that trade, so instead you wiped your account out. And it would have hurt, but at the same time, wiping your account out is a whole lot worse. And I'm saying this from a point of view of somebody who wiped out 2 or 3 accounts. Okay, I'm not talking about this. I'm not talking about this in a vacuum. And I think every person that's successful in this game has wiped out 2 or 3 times. I don't know of anybody who has played this game and won long term, without without going in and going through those experiences. It's just part of the game. It's part of it's part of the learning curve, I guess. I think we're all built, differently, but at the same time, we all have this little part in us that need to get smacked upside our heads for whatever reason.
Well, I think part of the reason is it goes back to the situation of trading, and I like to say it's not like baking a cake. If you've got this cake recipe, you can give it to other people. If they follow the instructions and, to the letter, unless there's some other outside circumstance, like maybe they're at a way different altitude than you are, if they follow those instructions and use the exact same ingredients and make no alterations or substitutions, they're going to make a cake that's going to be pretty close to the one that you made. As opposed to trading, you can take a flip-flop box one time, it's a winner. You take the exact same flip-flop in the same location the next time, it could be a loser. And that's and that's the difference. And so, as humans, we're kind of built to recognize patterns, and we're kind of built to survive. But the problem is with trading, that what you need to survive sometimes is to take a loss.
Yeah, exactly. And that's the part that's hard. You're exactly right. I like the way you said that. Part of surviving sometimes is taking an, as the younger folks would say, taking an L is a place to go and take an L. It's sort of like, you watch baseball. I'm a big baseball fan. There are times, for instance, in the playoffs, or towards the end of the season, where teams have got it locked up. They're independent. No matter what they do, they're going to be independent. And they're going to come in, and no matter what they do, they're going to play, whatever team they're going to go and play. There's nothing you can do about it. Now there are a couple things you can do. You go and take your team, and you just go and try to get every win that you can. Okay, which is what a lot of people want to do. But sometimes, you know what? Hey, I got some guys over here that haven't played that much this season, and I might need them in the playoffs. I might need them in the big game. And I need to get them with some field time, some batting time. You know what? We may take a loss here, but I'm going to go and put Joe in there because Joe needs some time with real pitching. Joe needs some time out in the field. And I'm going to put him in there. And I know he's not as good as Bob over there. But I'm putting Joe in because Joe needs to go and have the time. And that's part of trading sometimes. Well, we don't go and take trades because we know we want to take a loss, but we do it from a different perspective. And that is that, hey, I'm in the trade, I'm in a loss situation, but in order to come back and play tomorrow, I take the loss. Because if I don't take the loss, I may get into a situation where, it may come back, and I may be able to pull a rabbit out of the hat. But there's also a chance where this goes really bad, and I don't have a rabbit left, because there's nothing left in the tank. And so we got to be careful with that. And so I like what you're saying. If we're not sitting there paying attention to what's going on, and we don't go and recognize that there are times to take losses, just so that we can continue to play, then we're doomed. And what I have found is that who the biggest losers are in the game of trading, at least what I found, is arrogant people. People who know they know. Okay? The people that you can go and try to explain something to, but they may even listen, but they don't learn from it, and they aren't willing to really, truly take it in and understand it because they know, and they're not willing to go and let the market do what the market's going to do. And the problem with that is that they may win, they may work in other environments, but I don't care who you are, you're not moving the market.
You know what? The fastest 15 minutes in trading is over. So, fellow traders, it really goes by quick. And so when you're trading, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.